Friends, how are you doing today? In today's video, we'll be looking at how to trade cryptocurrencies. I believe that the best way to trade cryptocurrency is by using crypto futures, options, and derivatives. Now, these are contracts that I will explain later that will help you to apply leverage in trading crypto. If you have $1,000, for example, and you want to buy and sell crypto, you can only buy and sell with $1,000. But if you are trading crypto futures and you use 100x leverage, which means you can buy and sell cryptocurrency that's worth $100,000 with just $1,000 that you have. Before we start, I would highly encourage you to smash the like button, smash the subscribe button. If you no subscribe, I go bomber your head. If you no like the video, I go scatter your head. If you no subscribe, no cryptocurrencies for you. Subscribe.com. Thank you. Before we dive in to see how we can trade different cryptocurrencies. So if you are wondering the crypto to trade, just go on CoinMarketCap that I'm showing you on the screen and go to the asset that's moving the most. So you can see, go for the top 5 that's moving the most for the day or for the week. That's how you can be able to pick the crypto to trade for that day. And if you pick that asset, you just go on Binance and trade that asset using leverage. Now, leverage simply allows you to have only $100 and you'll be able to buy something that's worth $1,000 and be able to sell something that's worth $1,000. So if you're only investing in crypto, you can only buy. But if you trade crypto futures, you can be able to both buy and sell. You can trade cryptocurrency on Binance, on FTS, and several exchanges. But the most popular is Binance. So therefore, in this video, I will take you through the best ways to trade cryptocurrency using futures on Binance so that you can be making money like me. In this class, we'll be talking about derivatives. What do we mean by derivatives? As the name implies, it means they are derived from other assets. Derivatives are simply contracts that their price is dependent on other assets. So for example, let's say Bitcoin. If you buy Bitcoin, you are buying the crypto itself. But if you buy a derivative of Bitcoin, you are buying a contract that its price is dependent on the original asset, which is Bitcoin. Another word for derivatives is simply contract. It means that you are buying a contract. The price that's stated on that contract is dependent on the original price of the asset. So you're not buying the asset itself. So since you're not buying the asset itself, you can buy, you can sell at any point you want. You can start your trading by selling before you buy, or you can start by buying before you sell. So when we use the word futures are contracts or derivatives that has rights and obligations. It means that you have the right to buy it and you must fulfill the terms and conditions of the contract. The word there is must, which makes it different from option. In an option, you have the right but not the obligation. So which means you can buy the contract and choose to fulfill the terms and conditions of the contract, which means you can buy the contract and choose to sell it at the expiration date. But if you buy a future, you must sell it at the expiration date. You must sell it at the date of expiration. That's why for futures, it has right and obligation. Right for you to buy, and obligation, you are mandated by law to fulfill the terms of the contract at the expiration date or before the expiration date. So, but for option, you have the option either to fulfill the conditions or not. And Binance has features in order to make trading easy and accessible to people. So if you are buying Bitcoin, for example, the price of Bitcoin is ridiculous, about $43,000, $47,000, $50,000. So if you are buying futures, you have more flexibility to take on leverage, which means that if you have $100, Binance can lend you $100 for you to trade like someone that have $1,000. So the extra money they're giving you is what we call leverage. So the main reason why people trade futures is to have higher leverage in order for you to take on more positions. So by taking on more leverage, you can increase your profit and also you can increase your loss. So here it gives us the overview of Binance Futures. If you go to it, so this is where you log in. If you have not created your account, this is where you read more about the options that are available and each of the tabs that you want to find out about Binance Futures. So here we'll be talking about USDM stable futures, coin margin futures, Binance leverage tokens, and Binance options. So the first one we have is responsible trading. So this is how you learn the best practices on how to trade on Binance Futures. We equally have USD stable margin futures. We equally have coin margin futures. We have vanilla options, leverage tokens, battle, derivatives. So did this with the learning. If you want to learn on how to trade on Binance Futures, the ups and downs, what's involved, what's not involved, the self-discipline, protecting your capital, and several other learning materials. That's what you see here. So the next tab that we have is USD stable margin futures. So we have two types of future trading on Binance. We have USD stable margin futures. We have coin margin futures. So this simply means that you are trading based on a stable coin like Tether, Binance USD coin. You are trading with coins that are on a 1-to-1 ratio with US dollar. So that's the meaning of USD stable coin. And you are given a margin. I've explained to you how margin work. If you have like a margin of 3x, which means that you have 1x and you can borrow 2x to trade like someone that have 3x. Let's say an example, which you are seeing here, which is a margin of 20x. It means that you have 1x. You are trying to deposit money to buy a property. In the case of you want to buy a property of $100,000, but you only have $10,000. So bank will ask you, what's a deposit? Deposit is what you have, which is your margin in this case. And now the bank will lend you $90,000 for you to buy that house. So the money that the bank is lending to you for you to buy the house is called leverage. The same thing works in margin trading. So for margin trading, if it's 20x, it means you have 1s and Binance will lend you 19x. If it's 10s, it means you have 1s and Binance will lend you 9x for you to trade like someone that have 10x. In the case of USD stable margin futures, it means that you are trading with stable cryptocurrencies. You are seeing it. We have USDT, which is Tether, and Binance stablecoin. And here we can see we have the perpetual futures. The word perpetual means from year to year. It continues to infinity. If something grows into perpetuity, it means that it grows forever. It keeps growing, keeps growing. So ordinarily for futures, you are supposed to terminate your contract on a quarterly basis. So which means if you buy it now, you are supposed to sell it at the end of a quarter, which is 3 months. But in the case of perpetual contract, it keeps rolling over and over again. It continues to infinity. If you buy it today, you are not forced, you're not under pressure that you must sell it in 3 months' time. It continues into perpetuity, it continues forever until any time that you want to sell, which means if you buy it, you can sell it anytime you want instead of the usual quarterly basis. So here we have coin margin futures. Coin margin futures means that you are dealing with cryptocurrencies that's different from stable coins. You are dealing with Bitcoin, with Ethereum, with Dogecoin, with Nanocoin, with Cardano, Ripple, and all kinds of cryptocurrencies that's not stable. We equally have coin margin perpetual and coin margin delivery. Now the next one we have is stable trading. I will explain this stable trading towards the end of this video. And we have battle, which is similar to what I will explain here. In this case, as if you're comparing with somebody, you're trying to trade with somebody, two of you are trying to do a bet to see who will win. We have information for you to get more information. And finally, we have activity that shows you the leaderboard and how to earn bonus on Binance. You can see the leaderboard here if that's your interest. It shows you the highest performing traders from across Binance Futures. Follow them and see their positions, rank up and make a name for yourself. So people that are trading margin futures on Binance and the profit I've made, it shows you all of them, which you are seeing here. So we'll go through the entire screen and I'll explain to you one after the other what works and how each of them tie up together. So let's go with USD stable margin futures. So which means you are trading cryptocurrencies based on a stable coin. And in this case, we have BTC USDT. So Bitcoin versus USD Tether, which is a stable coin. And now you see it's a perpetual contract, which means it goes from infinity to infinity, it keeps going forever. You don't have to sell it at the end of a quarter. Here you can see all the assets that you can trade with. Just click here. You see all the assets here, perpetual. You see perpetual contract delivering. You see BUSD perpetual. Here you can pick all the assets you want based on USD, perpetual contract, coin margin. So it depends on what you want to trade with. So this is where you pick your asset. So in this case, our own, which is the first one, you click on it, it will show you the price here. So this is the price of Bitcoin. So the time I'm making this video, it's about $46,000. So this shows you like the changes that have happened with Bitcoin, the change that have happened based on volume, the highest price in a day, the lowest price in a day, the change that have happened in one day based on the price. It shows you also the funding, the index, and the mark. So that's what we have here. And if you come over to this place, we have the order book. The order book shows you the ask and bid price. So the ask price is what people are willing to sell Bitcoin, and the bid price is what people are willing to buy Bitcoin. When the bid and ask price meet, that's when the trade happens. If you click on this depth, you will see what people are willing to sell Bitcoin and what people are willing to buy Bitcoin. At the moment, you can see the bid are always in green, except you change the color, they're always in green, which are seen here. So these are what people are willing to buy Bitcoin, and it's slightly lower than what people are willing to sell Bitcoin. And when the two of them meet, that's when the trade happens, which you are seeing here. And I just click on depth for you to see it here. You can also click on trading view for you to see the chart, how the chart looks on trading view. Trading view is a different website of its own that's very popular for trading. It shows you the latest chart and other transactions. So because it's very popular, Binance had to include it on their Binance Futures so that people that are used to trading view can do it here on Binance Futures. So you click on original. Original is Binance's own chart. This is the chart that's made by Binance. Two of them are the same thing, just that this original is Binance's own chart, and trading view is the chart that's imported from TradingView, which is a website of its own. Most trading that people do actually happens on TradingView. It tracks our market and it has different charts, so it's very easy to navigate. It has good user interface, it has good transaction, so it's very popular in the trading world. You can also expand here by clicking on this button for you to expand and to cover the full screen. If you want to see the full screen view, if you want to zoom in and zoom out, this is where I click on this place, it will come back. And if you want like 4 charts instead of having only 1 chart, you can click here for you to have access to 4 charts. But I'm okay with 1 chart, so there's no need for me to click there. But if I click on 4 charts, you can see it will divide my screen into 4. If I have different indicators I want to put on my chart, so I can drag each of those indicators here for me to see, but I prefer the 1 chart method. Now, I've explained to you about other book that shows you the ask price and the bid price. Trade simply shows you the transaction have happened. So I told you when the bid price meets the ask price, trade happened. So this shows you the trade have happened and the time that they happened, the amount that occurred. So this shows you the trade. You can actually close this button if you want, or you can simply drag this to cover it. I think there's a way to close it if you want to close it. Now we'll take you through what happened through this chart. On the horizontal axis, it shows you the time that you want, and on the vertical axis, it shows you the amount, the price that you want. So the chart you're seeing here is just a chart of price against time. So for Bitcoin, it's telling you what Bitcoin was sold at a particular point in time. Now, if you click on time here, which you have at the top left-hand corner, you can see it will change the chart setting from a candlestick chart to a line chart. So if you want to use a line chart, just click on time for it to be adjusted. So if you want to go back to candlestick, you go to this option here, which you are seeing here, and you can click on any candle you want. If you want bar, you can click on bar. So here we have 15 minutes. So which shows you the time range for 15 minutes. What happens based on 15 minutes? We have 1 hour, we have 4 hours, we have 1 day, we have 1 week. And here we have longer time frames or smaller time frames, depending on what you want to use. So here we have 1 day here. If you want to see how the chart is behaving or how Bitcoin is behaving based on a 1-day chart. So this simply means that each bar here represents 1 day. If you're on a 1-week chart, it means each bar here is for 1 week. If you're on 1 hour chart, it means each bar here you are seeing is for 1 hour. Here you can pick the time frame that you want. And when we go here, you can pick any technical indicator that you want. So whether you want to pick moving average, Bollinger Band, average price, all kinds of indicators for trading that you want. So let's pick moving average, for example, for you to see how it works. We picked one, you can see the price here. So here you can modify it further to change it to a longer moving average or a shorter moving average, depending on what works for you and what you use for trading. You see that different chart here, and you can always remove it or hide it by clicking here. So here you can see, so the first one is to hide it. This one is to change the settings, and this final one is to remove it. If you click here, we'll get more options on what to do with the indicator that I've shown you, whether to copy it, to clone it, to remove it, and several other things. The next item we have is to show you your order, your open orders, your positions, your order history. Basically, it shows you the thing that's here. So if I choose to buy Bitcoin and I open a position for here, I'll come to in a minute. For whatever position that I open, it will show me my position here, my open orders, the history, and any other transaction that I've made in the past based on Binance Futures. Now here, I explained to you that here is where you can change your candle. So if you want to use hollow candles, bars, line, area, whatever suits you best. This is area. I can change it to use bars. So depending on the chart that you are accustomed to, you can pick it here. I pick candles here. So here is where you can pick candles or any other type of chart that you are interested in. So here you can take a screenshot or a snapshot as we call it. So if you click on here, you can take a snapshot of this page and save the image if you want to. Here we can do a comparison since we are TradingView. So whatever that you are seeing here is similar to what you would have gotten on tradingview.com. So here we are on TradingView, so you can see all these things here are very similar to what you will get on TradingView. And here you can choose the price that's being shown to you. So for comparison, it's used to compare one price with the other chart or one symbol with the other symbol. So you can compare this Bitcoin chart with Ethereum perpetual contract for you to see how they behave together and how Bitcoin and Ethereum are behaving in regards to each other. You're seeing it. This Ethereum, this Bitcoin. And if you don't like it, you can always remove it. And here you can show the price that's being shown to you here. I told you this place is for price. So which price do you want? Is it last price, mark price, or index price? Simply go with the last price, since that's what most people use in trading. Mark price and index price are used for calculations. Since we're using perpetual contract, that used to do some calculations for you, but that's not our focus in this class. So here we are through with what's at the top of the chart. If you come to the left hand side of the chart, you can see that we have different symbols, different things you can use to make your trading life easier. If you want to draw, for example, you can click here, pick the pencil and draw. I'm drawing if I want to draw something for you. So that's what this is for. If you want to measure, you can use this one to measure. These are items that are here to make you to understand your trading better. If you want to zoom in, if you want to put some emoji, want to make it more interactive, you can put it here. I click on each of these items that's here. See, there are different lines, different things you can use to make your trading easier for you. And all of them is similar to what you have on TradingView. You can pick any of these depending on the one you use. See Fib ratio, Fibonacci retracement, if you're interested in that. So as you pick each of them, in order to understand your trading patterns better, they are all available here to make you understand your trading patterns better. So depending on what you use and what's available to you. And I can use this to clean all of them. If I want to stay in drawing mode, so I can use this to clean each of them. I can hide all of them by clicking hide. And I can delete all of them by clicking delete. So that's how you play with each of these items here in analyzing your chart. They're basically used for you to understand and analyze your chart better. So here we have positions, open order history, trade history, and several things like that. So this will bring us to this point because as we play with each of the items here, it will affect what's here. Here there are three different ways to put a trade. You can use limit, you can use market, you can use stop limit. But before we get there, let's explain what's at the top. If you want money, this money that I'm showing you, hit the subscribe button, hit the like button now, and you have access to all this money I'm showing you. Instead of giving you this money, let me show you how to make your own money by trading cryptocurrencies. Yes, and the best way to trade cryptocurrency is by using crypto futures. And the most popular ways of trading crypto futures is through Binance. Whoa, money everywhere. Let's start trading, bro. So here we have wallet. So if you want to transfer from your margin future wallet to your com future wallet, this is where you do it. So click on the wallet that you want. It will adjust itself. So click on the wallet and do a transfer here. So you can transfer from fiat and spot or cross margin, selected margin wallet, into the wallet that you want. So you can pick any of these to transfer into. For you to trade your cryptocurrency, first of all, you have to do a transfer from most likely your fiat and spot wallet into your USD stable margin futures. So here you type the amount of crypto that you already have from your future wallet and click confirm for it to be transferred. This is the way you can trade. Without transferring, you cannot trade. This shows you what you have in your account. And as you can see, I have here $0 because this is used for demonstration. If you want to convert, buy crypto, borrow crypto, and your transaction history, all of them are shown here for you. So the next one we have is order. It shows you the order you have based on what you're trading. What orders do you currently have and what orders have you placed in the past? So this shows you your open orders. As you can see, just click on it. It shows you your open orders, either for USD stable margin futures or for coin margin futures. This is your profile. It shows you your account and several things related to your account. And since you're a beginner, I would encourage you to start with mock trading. Mock trading It's where you can try one or two things to see how trading works. So don't just use your money to start trading. I'll encourage you to start with a mock trading account for you to see how trading works, so that you can be able to know if it's for you or it's not for you. Trading cryptos can be profitable, but that's when you know what to do. And this class is just the overview of Binance future trading. So here you can change your language from English or whatever language you want to put it. Here you can change the currency from US dollar to any other currency that you want. And if you click on here, we have more settings on how to change the face of this page, whether you want a fresh page or a traditional page. Simply this with color, how your candle will look like. Is it red and green and red, and the different variations that you want to use. If you have color problem, you have color vision deficiency, this is for you. So here we have other mode, which is what I'm using now. We will have multiple charts. If you want to use multiple chart setting, then you click on this to select whether you want 2 chart, 3 chart, 4 chart, 5 chart, 7 chart, depending on the number of charts you want. But let's keep it at default. Now you can choose to select any of these items that you want here, or you choose to leave it at default. Most people just leave here at default, except you have a reason why you want to change it. So here you can change it from light mode to dark mode. So this is for you to change it to light mode and dark mode. So this is for light, this is for dark mode. Next thing we're seeing is cross. We have 2 types of margin on Binance. We have cross margin, we have isolated margin. Cross margin simply means that your money will cut across all your various platforms. So all cross position under the same margin asset share the same asset across margin balance. In the event of liquidation, your asset full margin balance along with any remaining open positions under the asset may be forfeited. I told you when we talk of margin, we're talking of borrowing money. So if you borrow money from Binance in order to trade, you can choose to trade only for a particular pair, let's say BTC, USDT, or you can choose to trade it for any asset. If you are interested to you to trade for any asset on Binance, any pair, you go for cross. But if you want to borrow it for a specific asset, I want to trade only Ethereum and USDT, you go for isolated. So isolated simply means it's only for one pair. It only works for one pair. The money you borrowed, which is called leverage, can only be used to trade for that particular pair you've used to borrow it for. It won't work for other pairs. But for cross, it can work all across the platform, all across the different pairs on Binance. So you pick anyone you want, like click confirm. Here shows you the leverage that you are taking on. There are different leverage you have. If you are using 1S, it means you are not borrowing any money. So this is your own money, that's 1S. And I told you that the maximum that you can borrow on Binance is 124, which is a leverage of 125x, which means that you already have 1S and you borrow additional 124, so that you can trade like someone that have 125x. So the higher the leverage, the higher your profit, and also the higher your loss. I don't think you should go for high leverage position, except you have a reason to. Otherwise, stick with the lower leverage, because higher leverage, higher reward, and higher loss, depending on what works for you. So just go with the one that's on Binance, which is like 20x, and start from there and see what it gives you. It means that if you're using a leverage of 20s, which you are seeing in this case, it means that you have a deposit of 1s, and Binance will lend you 19x. So 19s that Binance is lending to you plus the 1x you already have is this 20s. And so which means that if you have $1,000 and you want to buy a crypto for $1,000, so if you're using this 20s, it means you can buy a crypto now up to $20,000. So it moves your money from $1,000 to 20 times your money, to 20 times 1,000, which is $20,000. So which means instead of buying like someone that have only $1,000, you are buying like someone that have $20,000. Let's say if you're using 100s, it means that you can buy like someone that have $100,000. Is that not exciting? You only have $1,000, but you can buy and trade crypto like someone that have $100,000. That's if you're using 100x. So which means you are placing position now like someone that have $100,000. If you make a profit, of course your profit will be exaggerated, and if you make a loss, it will wipe away your $1,000 as early as possible. So that's the problem with leverage. It's also a good thing, which is also a bad thing. If you click here, we have some other preferences that you may prefer based on trading rules, based on take profit, stop loss, and different things that's here. So depending on the one that works for you. So if you want to buy Bitcoin, for example, let's say you want to trade Bitcoin, you can click the size that you want. If you don't want to click the size that you want, you can just go with this slider here to pick how much Bitcoin you want to buy. So it's not only Bitcoin. If it's USDT that you have, you can click on USDT here. I click on buy 1 Bitcoin. I can click on buy 100 Bitcoin, for example. Here, I can use to control the amount that I want to buy. If I'm buying 100% of it, you click here. If it's less, I drop it down to the amount that I'm buying. So this shows me that the available money I have on my USDT is $0. Now, if we come down, we have take profit and stop loss. Take profit is to show you at what price do you want to take your profit. So let's say I'm buying 1 Bitcoin here. For example, remember I'm under market. Market means you are buying at the current market price. At what point do I want to take my profit? At what point do I expect Bitcoin to reach? So the current price is $46,000, which you are seeing here. So I can take my profit when Bitcoin has reached $50,000. And I can go based on last price instead of market price. See? So which means I'm buying 1 Bitcoin here, and I'll take my profit when Bitcoin has reached $50,000. So when it has reached $50,000, the market will close by itself for me to take the profit. And also, if the market go against me, that's when we have stop loss. If I'm saying the market will go up from 46 to $50,000, what if the market goes down? At what point do I want the market to stop me if I am wrong? Because the further it goes down, the more money you will lose. So to avoid losing all your money in one day, you want to put a stop loss. At what point do you want the market to stop you if you are wrong? So let me put $46,000 or $45,000. So this simply means that I want to buy long at this current price of $46,000, which you are seeing here. If I'm right, I want to stop at $50,000, which means I'll make a profit of about $3,500. And if I'm wrong, I want to stop at $45,000, which means I will lose about $1,000 something dollars. So which means that this is like a ratio of 2 to 1. So my profit will be higher than my loss. And that's what we do in trading. You want your profit to always be higher than when you lose. So if you want to trade, your minimum take profit to stop loss ratio must be at least 2 to 1. For if your stop loss is 1, your take profit must be at least twice of that amount. So once you are done here, you click on buy long or sell short, depending on what you want to go for. So in this case, it's buy long because I'm expecting the price to go higher. But if I want the price to go lower, I will change it to like $45,000. If I'm expecting Bitcoin to drop, I will go for $40,000, which means it will drop down, and I'll put my stop loss at $50,000 if I'm wrong. And I click on sell short. That means you are expecting the price to go down. Can you see? When we come to future, this is what you enjoy. You can go for buy position or go long. You can go for sell position or go short. So you can click this one if you expect the price to drop. Now, this option you're seeing, reduce only, means that if you take a position for that day, you don't want to go higher than that position. So let's say I am buying 1 Bitcoin for a day, and I want to discipline myself so that I won't be over trading. I won't buy 10 Bitcoins in one day. So I use the buy reduce only position, which means that I can only drop my position from 1 Bitcoin to, let's say, 50%, 30% to 99%. So for that day, I can only drop my position from what I bought. I can no longer increase my position. So if I say I'm buying 1 Bitcoin and I click on reduce only, so what I can only do with my open trade is to reduce. I can no longer add to it. It's a risk mitigation strategy to prevent over trading. So what I've explained to you is very simple here because we're using market position. So the next one we have is limit. If I'm using limit position, it means that I am buying at a different price, contrary to what is in the market. So at the moment, the price of Bitcoin is 46,553.9, which you are seeing here. So what if I want to buy when Bitcoin is $50,000? I have to use a limit order for it. That's why we have the word limit. You are buying at a different price, contrary to the market price. I want to buy when Bitcoin has moved up to $50,000. And how many Bitcoin am I buying? You can click 1 or 0.1. You can also use this slider to control the percentage, depending on what you want. So if you're using this slider for the percentage, it will go based on the amount of money you have in your account. So I'm buying 1 Bitcoin, which you are seeing here, and I've explained to you how to take profit and stop loss work. It works the same way that I've explained to you in the case of market price. And how reduce only work, it works the same way as if you're using market price. So here you can click on buy long or sell short, depending on the one you want. And if you're selling short, remember, the price here will change to a lower price, which is like $40,000 instead of $50,000. So here shows you your margin ratio, the amount of money you have, the amount of money you borrowed, and the amount of money you need to have in your account for you to have an open position. Here we have maintenance margin. We have margin balance, which means the amount of money that's left in your account, which is your wallet balance plus unrealized profit and loss. So this shows you the margin you have in your account, what is in your account, in your wallet balance plus the profit or loss you've made, for you to track your margin. Because if your margin is below a certain limit, Binance may call you to add more money into your account, or else they will liquidate your position from their end. So that's the purpose of this margin ratio, to show you that you need to have a required margin. Remember, I said that margin is a deposit of a house. For you to go to bank to borrow money to buy a house, you need to have a deposit. Maybe bank says like you need to have a deposit of 10K. If in the future your deposit decreases to 5K, bank can tell you, no, this is not what we want. Your deposit must be at least 10K. So they'll call you for you to add more money into your account to make it up to 10K. So the same way it works for a bank is the way it works for trading. And in trading, we call it a margin call. A margin call is just a call from your broker, in this case, Binance, for you to top up your money. And this happens when you're in a losing position. But if you're in a profitable position, most likely they won't give you a margin call. So I've explained to you how market price work and how limits work. So let's go to the next one, which is stop limit. A stop limit works in an exciting way, which means it has a limit and it has a stop. Now, if I go back to a moment of how limit work again, if I want to sell when the price is $40,000, so now I want to sell when the price is $40,000, and I want to sell one Bitcoin when the price is down to $40,000. Here, $40,000. That's where I want to sell. The way limit work is, it doesn't mean that it will sell for me when the price is down. No, it simply means that my position will be initiated. My position will be triggered. So which means that when the price has reached 40,000, it will trigger my position to start. So which means the next price can be 39,000, can be 38,000, can be 20,000. So, but it must reach 40 for you to trigger the position. But most times the difference is not so much. At this 40K you are seeing here, my position will be triggered, and which means I can buy at any point down 39, 38, 37,000. I can even buy when the price is 20K. But if I don't want that problem, if I want to give a range that the price should trigger at 40 and buy below, but don't buy anything up below $38,000, I can use the stop limit to control that. In the case of sell, I've explained to you, I want to sell when the price is 50K. When the price is 50K, it will be triggered. Does not mean it will buy. It will start now and buy at the next available price. The next available price can be 60K, can be 70K, can be 80K, can be 100K, can be any price, but it will be triggered at 50K. So what I need to do is to use a stop limit to tell it that once you reach 50K, you can initiate and start buying or selling for me, depending on the option I want. But don't sell above 55K or above 60K. So just to put a limit to your position. So in order for you to use a stop limit on Binance, first of all, you have to use a limit first. I want to buy Bitcoin when the price is $40,000, which you are seeing here. Now I can click on buy long. Take note, the price here is $40,000. So that's when Bitcoin has dropped to 40K. That's when I want to buy. So I can use a stop limit to control it, or like you can buy when the price is 40K, but don't exceed 35K. So I just want to buy within the range of 40 to 35K. So here I'll put a stop price of 35K so that it won't go and buy for me when Bitcoin is $0. It's just to put like a boundary. So the boundary will be what's in my limit, which is 40K. That's in my limit I've placed, and what is my stop limit, which is 35K. So it places a boundary of what price you are comfortable to buy or to sell. That's the purpose of stop limit. So here you put the stop price you want, 35K, and here you put the price you want, 40K. So I want to buy Bitcoin when the price drops below 40K, but not when it drops more than 35K. And how many Bitcoin am I buying? One Bitcoin. I can use the slider to select the price. The take profit, the stop loss is the same way as I explained earlier for you. Then you click on buy long. If you click on buy long, I don't have the amount in my account. If not, it will open here to show me my open positions, my open orders, the history I've done before, the trade history, transaction history, and several other items that you are seeing here. It will show me the price, the time I bought it, the amount, the symbol. That's what we show here for you. And if you want to cancel your open orders, you can click here on cancel all, to cancel your open orders. Now we have other type of limit, such as stop market, trailing stop, post only, TWAP. There are different ways to control your positions. So I won't be going into details into all of them because most people will end up using stop limit and or market price. So if I'm using like a trailing stop, for example, for a trailing stop, it will keep going my way except it pulls down below a certain percentage. So if I say the market should go up and the market is going up, but if the market pulls below 2%, it will end the position for me. It's a way to minimize your loss. So this is the price at which it will start, and this is the amount you are buying, and this is the percentage you want. That if the market is going up and it pulls below, Bitcoin is very volatile. You want to be getting profit, but if the profit goes below a certain percentage, you want to take your profit that you've already made so that you won't lose all your profit. So that's why people use this trailing stop, 1% or 2%. You can even put any amount that you want, so that you are like Bitcoin, keep moving this way. But if you reverse, don't take all the profit I've made. Just stop at 1% or 2%. So Bitcoin will just be moving for you, be going up. But when it's about to reverse, it will stop based on the percentage you put here. That's what we call the callback rate. And this is the price at which you activate it. So it's not the price is 46. You can put it at that this thing should start when the price is 47K and 1 Bitcoin. So that's the way trailing stop work. Now, there are different strategies that's being used in trading cryptocurrency. And if you go to the course that I've attached the link in the description box of this video. It explains to you different strategies that you can use today to start trading cryptocurrencies. What are you waiting for? Just hop in and enroll in this free course in order to learn different strategies to trade cryptocurrency futures. Thank you guys. See you in the next video where we'll discuss more on trading cryptocurrencies. But ensure that you've liked and you've subscribed to this channel. If you no subscribe, I go bombard your head. If you no like the video, I go scatter your head. If you no subscribe, no cryptocurrencies for you. Subscribe.com. Thank you.